credit rating as AAA and the outlook being stable, but it is possibly the worst AAA affirmation I have ever read. In fact, they say the near-term situation is such that it may be placed in the future on credit watch, on some form of credit watch. It sees deteriorating debt as a growing risk to sovereign creditworthiness. It does say that the U.S. is supported by structural strength, by wealth, by the idea that it gets to issue the dollar. But it sees the deficit, Sarah, initial indications from the stimulus bill that was just passed, increasing the deficit to 13% of GDP in 2020 from 4.6% in 2019, and debt to GDP, the all-in debt, rising to 115% from 100. So they are affirming the AAA. You remember the last time the debt was downgraded, I believe, or put on credit watch by Fitch was 2013. It was actually downgraded in 2011 as part of the fiscal cliff. But they're affirming this, but it seems like one of the most reluctant and worst affirmations I've ever read. Sarah, I don't know if you saw today, but there was something of a widening in U.S. Sovereign debt CDS, which you take out insurance against default. It was not huge, but it was a widening of those spreads. So the idea here, I think, is we are coming out with a huge spending plan, but it's not without cost because they're concerned about the creditworthiness of the United States.
Yeah, Steve, and Steve, you know,
I'm
it
also
always comes
just
back
reading
to the
that
U.S.
It says, go ahead, Sarah.
Sorry.
No, I was just going to say we've had these fears about the U.S. credit before and about U.S. deficits, and yet the U.S. is still number one. Everybody wants our bonds. Everyone wants our dollar. And as long as that system is in place, Steve, I wonder if we're really going to have any type of reckoning or real fear about the U.S.
That is correct, Sarah. And it's my recollection, Sarah, that U.S. bonds rallied after the downgrade by the rating agencies. We are the place that people come to when risk is off. And that is something that helps the United States. I just feel like Fitch is putting out a warning sign there. It says, you know what? You keep going this way. Remember, the downgrade in 2011 and 13 was about the political will, not the financial ability or the economic ability, but the political will to address the debt problem. And that creates this issue here of when it rises to a certain level, what we do about that debt. I think it's just something we have to keep in mind as we embark on this tremendous spending plan here to try to save the economy from the effects of the virus.